a sense of capital. Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Live Earnings. Your host of today, as always, is Drew, and I'm very glad to have you in. Guys, even if it's quite late, at least in Central Europe, I already took a sleep. Honestly, guys, it was a long day full of work, and I overslept a bit, so took the alarm clock, jumped into the bathroom, a little bit water in my face, and ready for this take, ready for the stream. Even though we are late, like roughly, I think 20. Well, how much is it? 25 minutes. And I think the results are already live, roughly 20 minutes. Not 100% sure about it, but they are live. And guys, honestly, I don't want to lie, because when I check out and opened the different tabs for the stream, I already saw the price, the aftermarket price. You can see the post-market of roughly 13.7% up. So I assume the numbers are nice. I assume the numbers are in line with the estimations. I already had really good feeling in my gut about today's Q3 2024 earnings results of Grab, the Southeast Asian food delivery, package delivery, mobility and financial service provider out of, already mentioned it, Southeast Asia, located and headquartered in Singapore, but active in overall 8 Southeast Asian countries. But before we jump into the details and together checking out what are really the background reasons for this post-market raise of roughly 14%, just a quick disclaimer, as always, in the upcoming minutes, this will not be financial advice, consultation or whatsoever, and there's no guarantee of provided for the correctness of the provided data. Give me a moment for a quick zip. Okay, guys, and let me quickly, not waste too much time of you, and share the screen, start talking about this company. So, who is actually Grab? You can see it already here, the bicycle drivers, the motorbike drivers wearing, and the passengers wearing this helmet. So they are a super app, basically a provider of a platform through a super app, which is separated in 3 different major pillars. One is food deliveries and mart deliveries. Then we have mobility services. You can see it here. Transport services through car, through Grab bike, for rickshaw, depending on the region where these services getting provided. And last but not least, the rising star financial services, first rolled out in Singapore and Malaysia in their home markets, let's say it like this. But now I think even announced or released, I think 1.5 quarters ago, as well in Indonesia. So a big hope into this business. And of course, through all these 3 pillars, they open or offer the customers to advertise their services. For instance, restaurants, and advertising is definitely as well a source of income, which is getting stronger and stronger when we take a look at the sheets of Grab. Look, just one more detail when we talk about the details of, or the background pillars of these 3 major pillars. Deliveries, you can see it here one more time: separation, food, mart and express, so packages. Mobility, we already checked it, rides. And financial service, we're talking about wallet services, payment processing and insurances, but as well about digital banking. Actually, digital banking is this new core rising star, full digital banking license we're talking about in those 3 markets: Singapore, Malaysia and Indonesia, but as well additional service which is getting provided through the services like hotels, gift cards and other rewards. And we are talking about 3 different major customer dimensions. So the regular consumers, really the end customer, let's say like this. Then we have drivers, You can see it here. We drive through them for the mobility services or as well through delivery services, and of course the merchants. So basically stores, especially restaurants. Yeah, that is what we're talking about. What else do we got? A little bit like Amazon Prime, we have Grab Unlimited. And you can see here when you are a supplier, a subscriber of the services, you have a fixed monthly fee you need to pay. I think it's depending on the market, but on average something like $5. So you get different special conditions in these 3 major pillars, and even you get some discount, for instance, or you can collect some additional points, yeah, if you want to state it as that, at one of their own Jaya grocery stores, grocery chain, I think in Malaysia. So even this kind of stuff is existing, 35 stores roughly, but just that's a side business, let's say it like this. Of course fits perfectly into the overall business, but you can see it already here. We have Grab Pay, which is this wallet, yeah, when you are a customer of the food and the mobility services, delivery services, you can pay directly through Grab Pay. But more important right now, or which getting more and more essential, are this GXS banking and super bank services, so full digital banking services, loan, credit management, credit card, all this kind of stuff getting provided through their banking services. A few more information, you can see it here. Where are they active in? We're talking about, already mentioned, 8 countries in Southeast Asia. Again, headquarter, home market is original one actually founded in Malaysia by 2 single co-founders, and now headquartered in Singapore. They are right now actually inactive in more than 500 cities. So this slide is a bit old, from 2022, but overall roughly correctly, of course. Here we can see a nice illustration about the map, where they're active in terms of their delivery business and their competitors. And you can see, even though this slide is as well roughly 2 years old, you can see in 2022, in all the markets they are active, they are at least in the lead. Most of the time they are lead by far. Strongest competition is going on with Gojek in Indonesia, basically attacking the market with the same setup, with different income pillars, deliveries, mobility, and additional services. But I think even there, Grab getting more and more competitive. Yes, and here one more time, to make sure you understand the differentiation before this wallet business, Grab Pay, and the digital banking business. We have this GrabFin and DigiBank, you can see it here. And what are the products of GrabFin, Grab Pay, wallet, merchant and driver lending, pay later, scenario, insurance. And digital banks or digibanks, we're talking about current accounts, saving accounts, lending, other banking products. So really a traditional banking business, if you want to state it like this. The company itself, yeah, you can see it dropped a bit since we started the stream, but it's still roughly 13% up. The stock is now traded for a price before closing bell of $4.38 US. And we can talk, when we just roughly cover the rough numbers, we're talking about the estimated revenue for the full year 2024 of $2.75 billion US. It's getting more and more neutral when we talk about the profit level, but still of course losing money. So they're going more and more for the profitability. In the past, more focused on revenue increasement, now more focused on achieving neutrality in terms of their income. And what I want to share as well is the capital structure. As you can see here, we're talking about a market cap of $16.8 billion US, but due to the strong cash level of $4.9 billion US, an overall enterprise value of $12.2 billion US. So definitely a quite strong cash position and very low debt position of less than $300 million US. We don't need to worry about this in this regard. And when we take a look about the past earnings, just a quick glance, as you can see here. Yeah, we already now see. Oh, we don't see it. Perfect. It's not stated here, so I will not update it and surprise myself as well to get a review when we jump together into the earnings sheet. but you can see in the past in terms of earnings per share, Grab didn't perform that reliable. Sometimes underperformed, sometimes overperformed, and last quarter Q2 2024 just reached EPS forecasts. In terms of revenue, they're performing quite reliable, but here as well actually the past revenue result in Q2 2024, they actually missed it, which is quite new to the business. In the past, you can see they performed very strongly, provided strong beats, and in general, you need to know, I mean, when we just quickly share my evaluation sheet about this company, as you can see here, of course, you can follow me as well on X and on Instagram, or like, subscribe to the video, always appreciate it if you enjoy the content. But what I actually want to share is the valuation sheet of the last day of October, so roughly 12 days old. And please take a look here at these boxes in the second row. And just when we take a look at this fair price comparator, and the tendency is that if that's below 1, and you compare it to other companies, as you can see here, if it's below 1, that means it's likely a little bit overvalued. And just based on the KPIs, on the fundamentals, from my perspective, in Grab case, it's the case. But check out the title of this video. It's like ignoring the fundamentals and evaluation and believing in the story. And for me, this unique combination out of these three major income pillars, especially the digital banking potential, and combined with the regional characteristics, so being active in a very strong developing and emerging market like the Southeast Asian ones, especially just the Indonesian ones, is consisting out of so much potential from my perspective. So that's definitely worth so much that it might be, from my perspective, really the first component, the first big one, even way bigger than C Limited, if you know what I'm talking about, the e-commerce store, and as well digital bank, and games developer out of Southeast Asia, even larger story than C Limited on the long run. That's what I see in this company actually, guys, and that's the reason why I'm invested, even though for me, just based on the valuation and the numbers, especially because sales growth wasn't that strong the last year, this year, and expected next year, at least this year, still convinced because of this very unique DNA, let's say like this. Okay guys, I would say we go back, and now it's the time to check out the details. But before we check out the details, last but not least, a quick glance on the interest rate of the markets where they're active in. You can see Singapore, the intraday overnight interest rate quite stable, dropping a bit. Malaysia stable. Indonesia increasing and decreased lately in the September, so started to decrease. Let's see how it comes in the future, but overall in the past quarters quite stable. Philippines quite stable, very similar into Indonesia. Thailand started to drop in October, so definitely beneficial for the business, and of course for the exchange rate as well compared to the US dollars. And as you know as well, US dollar is starting to drop. I think 2 months ago in September, first decision by the Fed, and we can see here Vietnam stable as well. The levels of interest rate, you can see, I mean, 4.5, 2% roughly, 6%, 6%, 3%, 3.5%, 3%, very different to each other. But I mean, the message of it, as far as I can see it, but I'm not a Southeast Asian regional expert, looks quite stable, and it's not like whatever interest rates in some Latin American countries or whatsoever, double digit, very high, and inflation is going on, or deflation like in Japan. So this, at least from the first glance, looks good. Okay, but now we are at the point in time to finally start and screen together the results. For this reason, I prepared my Excel sheet. I will enter together with you all the information, add even further details later on. Looks like much, but will not take too much time. I mean, half an hour, I guess, for sure, but it's worth it. But then we can definitely compare all the KPIs which are getting provided by the management, and maybe even further information. And I mean, this year the management stated it as a little bit the year of efficiency, but second half of the year getting way strong in terms of reaching potential profitability. That is at least what mentioned by the management. And so far they acted very confident in terms of their full year guidance results. However, I want to see, just a quick one, I want to see first time earnings per share neutrality. So 0.00, no loss, no wins. That is at least what I like to see for today, even if the forecast is minus US dollar cent, $1. And in terms of revenue, forecast is roughly 696 million US dollars, but I would love to see 700 million US dollars. My dog is awake as well. I don't think she liked it that much that I'm streaming at nighttime, so we will keep it short and jump in. Okay guys, let's go back, and now it's finally the point in time to reveal together the results. And I would say we start press release, presentation. I always prefer the presentation for Grab to go through it. I like how they structured here, and most information I'm looking for, I find it in the, not all of them, but most of them I find it in the sheet. It's just a kickoff. Again, one more time, we will not see it on first glance, but target is 0 US dollar cents earnings per share, so neutrality, no loss, no win, and 700 million revenue for this quarter. Let's check it out. Let's go through it together. We can already see inclusion. Love to see this. Very nice. Very. Grab is company which taking care of ESG as well, very strongly, environmental, social, and governance, and great to see this. But let's check out what are the results. We have the revenue. They're just stating 17% year over year, and honestly, guys, we need to check out and consider always in terms of Grab the year-on-year constant currency results, and that's 3% up. I think it was already roughly in the same range last quarter the case. However, I mean, when I enter it in Excel, I'm not considering other constant currency conditions, because you need to consider, I mean, it's a company which is I think it's listed in the Nasdaq, so I mean they're doing their business. Not sure if it's Nasdaq honestly, but I think US listed at least, and they're doing their business in their local currencies, in the regions. But everything here is stated in US dollars and transferred in US dollars, and of course that's the reason why they stated as well in constant currency under constant currency conditions, and obviously in the local markets the currency compared to the US dollar is getting a bit weaker, and that's the reason why there is a difference, and that is what you consider as well. But however, first glance, group adjusted EBITDA looks great, and profit is existing. That might be the case that we definitely tackling the 0 earnings per share, and adjusted free cash flow again very positive. And you need to know, I think last quarter was roughly the first one where they had a strong, let's say positive adjusted free cash flow. So that's great to see, and I think they go for neutral or positive adjusted free cash flow through the full year. These are details we check out in a moment. Later on, I want to really go for the financial group results, and that is what we have right here. And yeah, first glance, here we know what is going on. Check it out, guys. 716 million US dollars. That's definitely roughly 20 million US dollars, or 3% more than the forecast, and 16 million US dollars more than I actually expected. So that's already a strong beat, and I can imagine again one more time on the EPS level it looks quite well as well. But what I would recommend, as always at this point in time, now we start to really entering together this information into the revenue sheet. So we have here the revenue, see it, entering it, easy peasy as this. You can see it here, year over year, 16.4%. I think they stated 17%, not sure about this, why, but roughly it should be 17% up, year on year, quarter on quarter. And earnings per share, I hope I can make it simple. If not, I get out the informations. It's not working regularly. I can just utilize investing.com, for instance. Make me check out as well grab for quickly getting out the EPS number. If not, I'm adding net income and the share count, and then we can calculate it by ourselves. But however, let's check out if they earnings are already live here through Seeking Alpha, a platform which I can definitely recommend to get further data information of a stock and opinions by different analysts. No, it's not here in the news sections right now, so we are a little bit quicker than the other people out there. However, guys, then I do it by myself, and let's go back, and I will add this later on. However, first glance, wait, give me a moment. Please stay patient. The press release. Okay, let's check out net income. Okay, income. I think we got a tier 15 million. Okay, that looks good so far. Let me enter this quickly. Okay, yeah, that. And shares. What's going on with the shares count? Okay, wait, all shares basic. The diluted ones we use 4251379. 4251379. 4251379. Is it working? Looks definitely wrong, my result, guys. Wait. I give myself a moment and wait a moment, because you can see here the earnings per share is resulting in this number, and that's for sure not correct, not correct at all. Earning shares outstanding, but it's a big number, 4,251,379. Should be correct from my perspective. If I take a look at the earnings results, then very likely net income is not correct. Income. But I can't, if I then give me a more moment and I check it out later, the EPS level, I think. But what we can do for sure right now is in terms of revenue 760 million. You can see it, definitely a beat, better than forecast, better than my expectations with 700 million US dollars. So revenues already, when we give it a rating, we can go for a green one, a positive one. And now we can go a little bit deeper into the details, and later on check out the earnings per share. So guys, let's go on. Here we got a big piece of table. We always have the different quarter results, and in the last columns we have the year-on-year growth this quarter, and compare it as well to the last quarter's year-on-year growth to achieve higher transparency. And we're starting with the different revenue sources. Let's heading back to the presentation slide deck, to the group results. We got it here, and here we have the different income sources. We start with deliveries, revenue of 380 million US dollars. And you can see already they have always gross merchandise value, so really what is the turnover of all the services and goods through the merchants, yeah? And the revenue is really the part of share, let's say the fee, for instance, getting paid by the end consumers, by the merchants directly through the Grab app to Grab itself. So 380 million we got here. Going back to the Excel sheet, entering it. Looks already on the first glance very good, I can say. Revenue mobility, heading back, going down. 271 we got here, 70% year on year, 13% one more time, 13% deliveries year on year, 70% mobility year on year. So I assume that financial results looking very, very well, guys. This is how it should be. I mean, really now the Indonesian banking business getting ramped up heavily, so I think the impact might be here a very strong one. Okay, so let's check out. I mean, I would never invest in this company without this financial service portfolio and banking portfolio, so I rely strongly on it, my investment thesis. And you can see it here, 34% year-on-year growth. Actually not even that strong, but when we see loan portfolio, for instance, 81%, that's definitely a number, but we will check this out later on. However, 64 million revenue, that is a lovely number. That is what we like to see, and that is the amount we will now transfer to the tool. And we got the 760 million US dollars, 16 million US dollars. No surprise in this regard. We already rated it greenish, but you can see when we compare it. Yeah, it looks good. When we compare it, the overall revenue development year on year, this quarter to last quarter was definitely stronger, considering currencies, of course, not under constant currencies, but still it's a quite strong one compared to the revenues they need to achieve to cover the guidance of roughly 2.7 billion US dollars full year revenue target. So I think that's definitely a good one from my perspective. But most of the time, for most of you out there who are familiar with this business, GMV, so the cross merchandise value is way more important for me as well, because I mean revenue, that's about how high you set the fees, the delivery fees, the mobility fees. You can really adjust it. Yeah, you have really levers there, and it's up to the management how to getting more aggressive or less aggressive. But for me, the truth is speaking, the GMV, again, the cross merchandise value, and we have on-demand value, so that's just focused on deliveries and mobility. And now those are the numbers, and that's the reason why it's fat marked, which have for me more prioritization. and what we consider as well now with the results. Hi DSD, logo design specialist, very glad to have you in. Sorry that I'm a bit late, but again, we will now accelerate and go through the results and making sure we're not missing too much, at least from my perspective, doing my best to grant some service. So yeah, let's go on and taking care of the on-demand GMV, going back here to the deliveries services. We have here the GMV, and we have here the results, and we're speaking about roughly 3 billion US dollars, 2.965. Going back to the Excel sheet, 2.965. Okay, got it. And back to mobility. Oh, yeah. And that looks strong, honestly. 20%, that's really strong. I mean, 12%, not that convincing, guys, to tell you the truth in terms of deliveries. But on the other hand, they had a very strong quarter, last quarter in terms of deliveries. You will see it in a moment. But 20% mobility is for sure a solid one. And here we're talking about roughly 1.7 billion US dollars. So entering here the document, the 694, the data as well. Oh, 10 added too much. Now it should look great. And now we can already rate it as well. And you see it as I mentioned it. I mean, again, one more time. Let me see if you can see it. One more row to the column to the right. Hi Arun Raj. Yeah, give me a moment. I will check it out at the end if they reach EPS, but I think it looks good. I think it looks good on the first glance. At least I can see some positive profit number. And I mean, target was negative 0.01 US dollars, and I think they reached neutrality, but I will check it out in a moment, please. Yeah, just stay patient. However, let's go on with the GMV, and you can see here, as I mentioned it in a moment ago, the GMV is growing in terms of Q-on-Q and year-on-year growth when we compare Q2 to Q3 2024. And so business is re-accelerating actually, guys, comparing 12.6 to 14.7% GMV, and that's definitely a strong one. I mean, it's something where we don't expect too much growth, honestly, guys. That's definitely kind of a beat from my perspective, at least. So I can state on-demand GMV as a green one, as a positive result. No doubt about this. You're welcome, Arun Raj. Look, guys, numbers are, especially a balance sheet, I'm always limited with my abilities. I like businesses. I like really to invest in real enterprises, in services and products would imagine to be to appreciate it as a customer and consumer, and really grants a win-win situation. But heading really deep into the financial sheet, and I mean that's not really deep, yeah. But there I have my limitations. However, don't need to excuse myself. Can be successful or have great time in the stock market, even if you are not a 100% expert like me. Okay, and now we have here already the take rates in terms of GMV deliveries and mobility take rates. So basically, that's the relation and the ratio between revenue and the GMV. So what is really this level of fees? And you can see it here. They increased it quarter compared to quarter to quarter, Q2 to Q3 in both dimensions. And even though it is, when you take a look here, even though it's a bit lower in terms of mobility to 1 year ago, and a bit higher on deliveries, it is in general re-accelerating. So the piece of the cake they take out for the services getting stronger and stronger. And you can see as well that mobility is a little bit stronger in general, and that is even greater when we talk about GMV year-on-year growth of more than 20%. So that's hitting even harder in terms of the mobility perspective. So both of this, even though that is not really getting that stronger compared to last quarter, it's getting stronger. I would go for, yeah, I mean, let's say I rated, I rated neutral. And then neutral from my perspective is already sufficient, you know, it's not like bad or something like this. If I give a neutral rating and I have always quite high targets, for me it's absolutely fine. Let's see what the chat is going to. Yeah, DSD is stating it correctly, 100%. Next quarter will be amazing, do a holiday season, absolutely right. I mean, as far as I know, this season Q3 was as well tsunami season. Definitely these weather conditions have as well a negative impact on the outcome of the market, and still the results are looking well. So, and next quarter as well, there are feast days, for instance. So definitely some drivers, some tailwind for the business. You're very welcome, DSDS. I do my best. Can we buy $5 and load up more? Arun Raj, that's just entertainment what I'm doing here. I need to be careful, and nobody should blame me if he's just investing based on my comments and the stream and this live backing of the results. For me, again, one more time, just my perspective, I'm investing here into the story. I don't see anywhere else those circumstances. I'm investing heavily in the Southeast Asian market. I'm a strong believer of the market, of the citizens over there, of the overall business case, and of course of Grab, founder-led, so much potential, and with this fundament of a super app, I think it's very hard to measure the valuation just in numbers right now. I mean, it's difficult to ignore full valuation. And I do this a bit actually in terms of Grab. I do this in not at one other investment of all my 6 investments or 6 companies I'm invested in. So for me, actually, the valuation is a little bit worse at this company, at Grab. But I love the story, and even for $5, I personally, just my personal opinion, but again, no financial advice or something like this, I would still invest. Yeah, but maybe, I mean, the stock. Look, guys, when we check out together the price chart, it already raised quite strongly in the past months, and maybe there will be a setback, and it will come back a little bit down in the next weeks, maybe. Yeah, reset a bit, and maybe there is a better point in time to invest. But however, now talking about those aftermarket $4.84, I would still invest. I think this company is definitely running under the radar of many investors out there, especially in the Western world, where I'm located. I'm located in Germany, and I can imagine if they really accelerating the business, and I think it's just up to the management to increase revenue, to achieve profitability. 2026, I think the target is by the management to achieve profitability as well in terms of the digital banking, and they just rolled it out at the end of past year in the 4th quarter. And so there's so much potential. Yeah, for me, if I'm not would be invested, very likely, not 100% sure about the statement, but very likely would even now invest, or maybe would wait for a small setback. Yeah, that's just my personal opinion. Okay, I see the comment section is burning, and that is how it should be. Hi, Jack Trehorn. I know you are as well a loyal and reliable viewer, so very glad to have you in. I check out the comments in a moment and go on with screening the results in detail. And now we cover together the on-demand MTU, so monthly transactional users, so basically the active customers of Grab. Let's head back to the results, and they should be stated here in this table, and we have them here: group MTU and on-demand MTU. So it's basically separated, but we start with the group MTU. We're talking about $41.9 million, and that looks great as well, at least on the first glance. So going back to the Excel sheet, Wait, I'm not sharing the browser. One more time. Here we have the group results and the group MTU 41.9 million US dollars. So going back, 49, and when on demand we talked about 37.7, one row below, and entering this as well. Okay, there we go. 37. Oh, that's one too much, I assume. Correctly? Yeah, looks good. Okay. And Q3, that was not separated in the past, so I enter this number as well this time. Q3 last year it was 37 and 31.7. Let's go back. 36 it was, okay. 46 and 31.7. There we go. There we go, guys. So we have now the numbers we are looking for. Everything is up to date in terms of the sheet. Let's check out together. I mean, here for me primarily, again, we separate on-demand MTU, so the monthly transactional users of the deliveries and mobility business, and we have the non-demand monthly transactional users. So we're talking about banking business, OVO, which is a wallet service in I think Indonesia, the largest one actually there. Move It, which is as well mobility service, sub company. I think, where is it, in Malaysia? Or is it this Malaysia? I'm not 100% sure. Or Yaya Grocer already stated at the introduction and the briefing about this company. The grocery stores. I think that all of this is non-demand MTU, but you can see, yes, it's a relevant number with 420. Is it correctly? Or 4,200,000 users, but the way larger chunk multiplied with 10 roughly is on the on-demand side. Here we set a higher focus on, and here we can see when we compare the results, year-on-year growth past quarter was 19.5, now we're talking about 18.9, and look guys, I mean, it's lower than past quarter, and of course there's a certain saturation. You're getting closer to a certain peak, and we're talking about in whole Southeast Asia, in these 8 markets they're active in, with about, I think, a population of roughly 650 million people, and now they covered more than 40 million active ones, not like somewhere registered dead ones in the database, so really active ones. And so 18.9, or let's say 19%, is still good. It's not a banger, it's not that convincing. I rate it as neutral, and that's already fine. So no red rating, no negative one, no alarm clocks are ringing or something like this, alarm bells, so that's okay. But now we check out what they're really achieving in terms of on-demand GMV, so cross merchandise value per monthly transactional on-demand user. Wait, should design is a bit better, and you can see, compare it quarter on quarter, it's increasing. Yeah, honestly, just slightly, not even 2%, I assume. But when you check out and compare it to quarter over quarter growth, year-on-year growth, it's still negative. Yeah, you can see it here. Q3 2023, it was 128 US dollars. Even though it's not that low compared last quarter year-on-year, it is lower with minus 3.6%. Let's say I rate this negative. I mean, it's increasing and that's a good sign, but it's still a bit low compared to 1 year ago, and that's the reason why I set this up as a negative one, the first negative sub result but I guess I assume with the other results the company can bear it, especially when you consider Grab was, I think, the only company last quarter which I rated the results, just the results. I mean, I kept being invested in the company because, again, I'm convinced in it, but just the quarter results, I rated it negative. And this time, I think we're getting closer and closer to a neutral rating, which is great and which wasn't the case that often from my perspective in the past quarters. So now we're covering the financial dimensions, and then we're covering what I really love, the advertising business, the potential one, because if you are familiar with it, at Amazon, for instance, Amazon is more and more next to beside the AWS, the cloud business. A huge source of income is their advertisement business. So users merchants whatsoever can go for ad services, and position, for instance, their products better listed on Amazon's website, on Amazon's retail platform, e-commerce platform, and this kind of stuff is here possible as well. So I love to check out these numbers, and I hope they keep providing those numbers as well, this through their documentation this time. But first we go to the digital one, which is as well a lovely source of income, and for me the major reason why I'm invested. One more time, checking out the loan portfolio, how it's looking. So going back to the earnings documentation, and here we have it, loan portfolio, checked it out already, 81% year-on-year growth, obviously on the first glance looking very positive. And we should not miss out as well the segment adjusted EBITDA, which you can see here getting more and more to a neutral level. But let us enter first the loan portfolio. So again, one more time, almost double the number of 1 year ago, and I think it's accelerating actually, but let's see it. Not that I'm stating any wrong information. 498. Here we go, and here I need to enter as well the results of the past year, and past year it was 275, the quarter 1 year ago actually. So let me enter this as well. Okay, yeah, and that's actually amazing. And we can see it here, starting with the loan portfolio itself. And I assume that the super bank in Indonesia, with the big potential customer base, Indonesia. Whoa, let me check out. I mean, yeah, I have here the population in detail. From my analysis of past year, beginning this year, and yeah, population, where is it? We got it here. Hope you can see it. Check it out. Yeah, looks good. And Indonesia, I mean, overall we're talking about roughly 640 million citizens in Southeast Asia, and those 8 countries where Grab is active in. Just Indonesia is 260 million, so roughly 40%, I assume. So the launch of the super bank of digital banking business over there, I think, has a huge impact on the overall loan portfolio, and you can see it here. I mean, as well, of course, Malaysia and Singapore will develop positively as well, but there, in terms of the population, there is a certain limit existing, but in Indonesia, I assume there is so much potential left, and it's now just started. And you can see it here as well with the numbers, 100 million more loan portfolio quarter-on-quarter comparison. And when we check out the year-on-year growth numbers, last quarter year-on-year growth Q2 to Q2 was 70%. Now we're talking about 81%. So it's already very high. It's already very up and actually accelerating. So that's as well very positive. So we can for sure address to this a positive rating. And then we have loan per monthly transactional user. So really in banking business you would call it maybe ARPAC, so the average revenue per active customer. Here we have the loan per active customer, if you want to state it as that. And you can see as well that was a very strong one with more than $1 more compared to the past quarter, and that looks or demonstrates for me at least kind of a proof, yeah, at least from my interpretation level, that the customers trusting more and more the services and using more and more the services and the products of the digital banks, of the digital banking services of Grab. That's a sign for me, and you can see it here as well when we talk about year-on-year growth. Past quarter 45%, and now we're talking about roughly 56%. So accelerating here as well. So banking business, at least on those two numbers, and these are just two superficial numbers. And then the insights here are limited for sure, but at least it looks great. It looks great from my perspective. And now we're heading out to these advertisements. You need to know that till I think beginning of this year, we talked about roughly 4 income pillars. So the deliveries, the mobilities, the financial, how is it called? The financial services and the advertisement services. And then they stated, the management, okay, now we set the focus on the 3 major pillars. So basically deliveries, mobility, and financials, and advertisement is a sub pillar, let's say like this, which is has an effect and an impact, and it's a source of income in all those 3 major pillars, yeah, major sources of business and services and products. However, I don't want to ignore it, because again, I see here much potential in the future, even if this might be as well running under the radar. And so to take care of it, we check out now the press release, because based on my experience, in the press release, they're giving us some information about this. I hope at least they do it, still doing it. Okay. Let's see what kind of information they provide in this regard. Can you see the browser? Yeah, looks good. Increased 1%. Is this all information? That's not that much. In the past, they actually provided, just to show it to you. I mean, if it's the case, it's the case. I don't like it, because I actually added this category just for this session, because they focus this more and more. And you can see here, that's the Q2 results. And here they stated, here in the section, you can see it in this part of the press release, they stated that how the monthly active advisors developed, advertisers developed in terms of growth. We're talking about 170,000 in the past quarter, and how their spend level developed, 26% year on year past quarter. Yeah, and now unfortunately, if I'm not missing anything, but I assume I'm not missing anything, they state here some information about advertising, but they're focusing it not anymore. I don't like this. I love full transparency and information transparency by the management, and in this case I'm missing it. However, I can't rate it at all. So look, let's put it into gray color. No rating for this one. Maybe hopefully next quarter on, I mean, then it's full year press release, and hopefully this information will be back. However, guys, now we take a look a little bit about the shareholder orientation. And shareholder orientation, I mean, it's important from my perspective. Look, it's okay that company just focus on growth and investing, but on a certain point in time, you need to make sure that there's not so much dilution going on in terms of stock-based compensation, for instance, that the incentives level, so the special conditions, bonuses, the company is providing to their end consumers, to their merchants, and as well to their drivers, those conditions has a huge impact on the profitability of the business, and sooner or later each company in best case should reach profitability, a neutral scale. And so in terms of incentives, share, stock-based compensation share, and of course overall adjusted free cash flow and free cash flow margin, those are the numbers we as investors should be interested in, at least from my perspective. And so that is what we will now cover in the upcoming minutes. And starting with the incentives, so heading back to the documentation, which is this is the Q2 one. Okay, that is what we don't need anymore. Incentives, I think they always have a separate table for this. Oh, and let's check out as well, of course, the outlook. I'm very interested as well. Here we have it. Okay. That looks good. And here we go for... Oh, wait. That's incentive. Partner incentive, consumer incentive. Here, that's the one we are looking for. The audited results in terms of incentives. And overall total incentives, Q3 2024, 329.4 million in deliveries. 29.4. And of course, I would love that they would decrease, but it's an investment, of course. It's a competitive lever, and if they invest more money in incentives, so they grant higher incentives to different stakeholders of the business. But again, one more time, under these conditions, the profit level is suffering. So at least I want to see that it's actually best case growing lower than in the past, or growing lower than the GMV, the gross merchandise value. But let's see what is the case. I mean, in the past they surprised very negatively in this regard, and I would not be surprised if that's still the case. So let's check out as well mobility. And mobility, we got it here, $128.9 million US dollars. 128 point. And now, last but not least, financial services, and that's already on a very low scale running, but as well, of course, the GMV, the revenue level is way lower compared to deliveries and mobility. However, it's decreasing, as you can see here. Let's check out what are the results of this one. And 4.2, so it's increasing slightly, actually. Oh no, it's not increasing. Well, let's see. 4.2 million, going back and entering it. Okay, that looks better. Okay, let's see. One moment, let's see what is going on. Guys, you can see the screen. Okay, perfect. Starting with the delivery incentives, you can see it's growing very, very strongly. Last quarter, year on year, it was 5% up, now it's 29% up, so that's definitely not that good. That shows, I think, that there's really some fight going on. I assume that's resulting out of the Indonesian market, out of the competition with Gojek, at least that's my assumption. However, here I can only grant a negative rating, that's definitely not compelling for me. But let's take a look on the mobility services, and here again, the incentives level is growing very, very strongly. Last quarter, year on year, it was 19% up. Now it's roughly 27% up. So again, it's increasing the incentives level, what they grant. I mean, yes, you can see that in terms of mobility with 20.4% year on year growth GMV, it somehow has an effect. But it's still something I don't like to see, even though I understand it's an investment in the future. they taking a larger part of the overall cake of the potential market with these incentives, or creating more loyalty by their customers, by their merchants and their drivers. However, I need to stick to my principles and rate it negative. And now we check out the financial ones. And even though if you see, oh, it's larger than last quarter, yeah, by roughly 500,000 US dollars. And guys, you see, it's not that much, yeah. So financial services is not that incentives-driven business. The competition level here is very likely lower than in terms of delivery and mobilities. But you can see last quarter it was minus 42%, which is amazing, and this time only 4.5% negative, which is positive at the end for us as investors. So, however, not compelling that much, but I rate it neutral because it is lower. It is lower than 1 year ago, even though it's re-accelerating a bit. But guys, no surprise if they're really rolling out more aggressively their business in Indonesia, for instance, their digital banking business. It's just obvious and reasonable that the incentives level is increasing. But let's check out the defining number here is for sure the on-demand incentives share, and you can see it. I mean, we cover the incentives level of deliveries and mobility and set it in a ratio with the on-demand GMV, overall GMV result. And when we take a look here, actually, it's a bit surprising because it is lower, even only slightly lower. Let's say it's more or less on the same level like past quarter. But unfortunately, when we take a look year-on-year growth, last quarter comparison and this quarter comparison, last quarter it decreased, this quarter it increased. So again, here it obviously displays the same result even if we consider the GMV and set it in a ratio. So those are not compelling at all. So I rate this as well negative. Let me get this out here so it's not looking. We just need to focus the really important stuff. So overall, the incentives development, I don't like that much. However, it's acceptable. Again, one more time, it's kind of a tool to be more competitive and invest into the future as well. A bit like marketing expand, let's say like this, expenses. And however, would love to see that's not increasing that heavily. But now we take really a look on the stock-based compensation, what is going on here. And heading back to the documentation. Is it working? Yeah, looks good. Therefore we go stock-based compensation, I think is in one of the tables quite at, here we have it, share-based compensation expenses. And that it looks, at least on the first glance, good. So talking here about 53 million US dollars. I mean, it's part of the salary for public traded companies, but it should always run in a certain frame and not exceed a certain level of greediness. And yeah, that's nice to see. That's really nice to see because look, guys, on the first glance you can see it already. It's way lower than last quarter, but of course there's sometimes seasonality, and that's the reason why we compare as well year-on-year growth. And you can see past quarter it grew actually by 1%, which is not that nice, but okay, not that much as well. But this quarter it decreased by 4%. So that's definitely some kind of coming back. And you can see here stock-based compensation share of revenue. It was always in the past quarters, it was a double-digit number, and now the first time way below 10% mark, 7.4%. So that's definitely positive. Definitely positive. Love to see it. So the business getting more and more efficient. And now we're taking care of the last sub KPI, which is the adjusted free cash flow and adjusted free cash flow margin. Let's check out together. I mean, we already have seen it on the first page, or we can see it in the wait. We don't want to check out the outlook, but we can check it out here on the first, or one of the first pages, I think. Trailing 12 months adjusted free cash flow. Wait, let me do it safety first. I don't want to just free cash flow. Okay, we got it here. -6 it was. So I entered it already. The results for 1 year ago, the quarter Q3 2023, and now we have Q4 2024, and it's 138. Is this correctly? Let me check out. It should be. Don't want to enter a wrong number. Seems a bit high from my perspective. Adjusted free 137. Might be correctly, huh? Let me check one more time. What was last quarter the result? It should be like 36. Yeah, okay. Wow, then it's a strong one. Then this is a strong one. That's definitely a major cause, I think, as well, for the stock price increase after market, after closing bell. 137. You can see it compared to -6 million US dollars 1 year, the Q3 quarter ago. The third quarter ago. And let's enter it. That's definitely a big one. I mean, they mentioned already very likely they will achieve strong progress. But I mean, guys, that's for sure strong progress, no doubt about it. So let's check it out together. I mean, wow, that's really some attractive stuff from my perspective, just on the first glance. Yeah, I mean, don't get distracted or confused by the year-on-year growth number. That looks a bit awkward because it was last year -6 million US dollars, and now it's up more than 135 million US dollars. But I mean, here we can really set the focus on the absolute numbers, and we can see, I mean, past quarter it was already very positive with plus 5.4% adjusted free cash flow margin, and now it was quadrupled roughly to 19.1%. Compare it, look, just check out the results, check it out by yourself. The results of the past quarters, and I mean, just we're talking about Q1 2023, it was roughly -41%, and now it's up or plus 19%. So amazing results. That's very, very strong. They show that this business can be somehow positive and profitable. Is it correct? And so there's a certain level of income stream and of course cash flow, what you can use, even though it's adjusted cash flow, but what you can use for stock-based compensation, for buying back shares, for instance, this kind of stuff. So true cash flow for a lot of investors out there, free cash flow is definitely a very crucial number, and more crucial than, for instance, EBITDA sometimes. So love to see that's going, and that is heading into the right direction. Just give me a quick moment, and I'm checking out if I can use the EPS by investing.com, so I don't need to calculate it by myself, or investing.com is not It's not shared yet. Oh, it's a bit laggy here. I hope the stream is not going down as well. Wow, the performance is bad of my Wi-Fi connection right here where I'm located at. Shit, okay, because so investing.com and Seeking Alpha is still not displaying the earnings per share. Profit of the quarter was, wait, I'm sharing the screen one more time. I'm too dumb to calculate the earnings per share, I assume. But I can see 50 million and that is what I utilized already. It's a shame. That's not okay. Net function. No. That's not what we need. It should be 15 million. I mean, I'm quite sure about this. But the stock number, the share count, maybe might be the. Might be here the bottleneck. Let's check one more time the shares. Weighted average shares outstanding. Let's go. It looks, or did I miss? It might be the case. Guys, don't take it for granted, but I assume I missed 3 zeros. Let's say, check it out. The number of outstanding Class A voting shares was 3 and million. Yeah, okay. I missed 3 zeros, I think. So, guys, please take care by yourself if that's correct or not. But I think I missed those 3 zeros. And so then we're talking about, you can see it here. That looks better, guys. Whew. But please check it out by yourself. However, EPS seems, even if it's just a slight neutral result or positive result, it seems like a positive result. And so therefore, this one is, like this. And that's as well above my expectations and above the forecast. So EPS looks positive, looks great. And I rate it as well as green. So that's definitely a positive development, a strong one compared to the past quarters. But now you can see it here. We have another table, what we need to cover, and that's the full year guidance. Let's see if they're sticking to their outlook or if they adjusted it somehow, positive or negative. I mean, honestly, guys, if they adjusted it, I think they adjusted it into a positive direction. Okay, revenue, we can see it here. It's slightly adjusted. So I think the outlook in terms of revenue is as well an aspect why the price is heading upwards. You can see previous it was a bit lower, not a huge difference, but there is a difference. And you can see, I mean, the corridor before was 14 till 70% year-on-year growth, so quite a strong one, a large one. And now they're getting more precise and they are located in the upper end of this corridor with 17 till 18% year-on-year revenue growth. So, I mean, considering this is the old one, now it's a bit up. So that's definitely, how much was it? Roughly 2 million and this, so up for sure, green one, positive development. Adjusted EBITDA, I can imagine that this is positive as well, and promise you I didn't focus it before. Yeah, so that's up as well. They're getting more and more efficient in terms of their business outcome. So this raise is already definitely a stronger one compared to the revenue raise. But of course, both are very good development. So here we talk about the mid of 310.5 million adjusted EBITDA. That's definitely a strong one. 310. Definitely more. That's good. That's good. That is what I like to see. Positive one. And yeah, just free cash flow. I mean, look, guys, that is what they're stating here. And that's obvious when we talk about adjusted free cash flow results of just this quarter. So they are heading really to a very positive level. Full year, they kept it as it was before, unchanged, positive for the full year. And I mean, just to cover this as well quickly, and I mean, we can cover it in, let's say, neutral color, because it's not like they told us a specific number, so it went way more positive. But overall, full year guidance, no doubt about this as well, a positive one. And one more time, when we talk about this potential positive adjusted free cash flow level for the full year, I mean, that's the first 3 quarters, and it's already up by $75 million. Wait, I can calculate it as well together. $75 million. And so I don't assume, I mean, Q4 is based on the seasonality most of the time the strongest quarter. It will very likely not be a setback or something like this. You can see even one Q4 2023 results. Here it was already 1 year ago positive. The first positive adjusted free cash flow results ever in a quarter. And so then it went down a bit. I guess that's again seasonality, of course, and the overall development. And it would not surprise me if we even beat this 137 million adjusted free cash flow in Q3. So if we beat this number in Q4, so that will be definitely a strong positive one for the full year. That is my expectation. And guys, I mean, look, when we check out together the bottom line growth, top line growth, EPS and revenue or profitability, both positive. Then we check out the sub numbers, and yes, please ignore the gray ones, the neutral ones, where we don't get any information. Yes, we have 2 negative ones, red ones, especially when we talk about on-demand incentives. But again, that's an investment to the future. We need to respect it. But however, I would love to see it's getting lower. And on-demand GMV per MTU, per active user, basically, it's growing, but not that strongly. Look, maybe some out there would even rate this as neutral. I rate it negative. However, overall, it has a very positive touch. Yeah, a lot of green, a little bit yellow, even though it looks not bad. And again, the red ones are not the red ones where I see, oh God, these are I see some alarm signs, some negative signs in the horizon, at the end of the horizon, at the end of the funnel. That's not the case. I mean, GMV in general is developing great. Loan, the financial numbers is developing great. These are the important stats. Adjusted free cash flow is developing great. And incentives, stock-based compensation, that is not that heavily essential for me. For me, important really the GMV, the aspects which are sometimes a little bit more difficult to have an impact on as a management. If those going well, and they going very well, that's just very positive. Full year guidance, I mean, is covering this opinion. And I mean, again, one more time, Q2 2024, I rated it negative. I think before I rated it neutral. And I think this time, honestly guys, it's the first time I really have no other choice than granting an overall positive rating. Yeah, some standing ovations at this point in time, you are right. And now what we do at the last step for today is we go, or one of the last steps, we go a little bit more detailed through the presentation deck, not spending too much time. I need to go to bed, guys. I need to wake up early and go to work, even though I'm working from the home office here from this location, but yeah. However, okay, these rough numbers we already covered today. Let's check out some details, financial and operational highlights, realizing synergies across food and mart. You see a Yaya Grocer, again, one more time, there's 35 branches of grocery stores. Yeah, and I mean, it just displays that the plan of synergies between both services, so the food delivering service and of course grocery delivery service as well, and the mart service and Yaya Grocery, and in general overall these different subparts of the here of the delivery business, again one more time, food delivery and mart delivery business, there are the synergies existing, and what they want to show is that their super app platform business is existing. It makes sense for them to provide different services, and maybe in the future provide more services and products to the customers, to the audience, because they're simply accepting them and adopting to them. Yeah, the same I think is going on with the financial service actually. What we can see here. Financial and operational highlights, high value mobility rights continue to gain traction. 30% year-on-year GMV growth from high value mobility rights, so basically the premium ones. You can see the premium cars here in the background at this photo. Higher GMV per ride on high value of mobility rights. Yeah, so basically you can see this, for instance, the shuttle services and shuttle rides from the airports. So basically the stuff from not from the local daily business, but more the touristic ones is going well, which very likely proves as well that the touristic business is going very well in Southeast Asia. And when I take a look at my social environment, at my friends and family, I can definitely confirm it that Southeast Asia is definitely a lot of people heading there, traveling there, doing vacations over there, and spending money, of course, yeah. And that is what this sheet is showing a bit, and I think we had it as well. I mean, yeah. However, let's go on. Let's check out the financial one, so the digital banking as well. That is what I love to see always. Robust growth in loan dispersals and bank deposits, 38% year on year. But yes, GSX Bank, so GXS stands for Singapore. So actually it's driven very strongly through GXS, not even the super bank in Indonesia, for instance, or the GX Bank in Malaysia. Seems like Singapore is driving very well in this regard. So in Singapore we're talking about a more sophisticated, more developed market compared to other Southeast Asian countries, higher average income, salary, for instance, and GDP and this kind of stuff. And bank deposits across our digital banks tripled year on year to surpass 1 billion. That's you can see here the bank deposits. Look at this, guys. This lower row here. That's impressive, man. That's impressive without a doubt. And you can see, I mean, okay, ignoring the first developments, but then here Q4 2023 to Q1 2024, up 100 million. Then we go Q1 2024 to Q2 2024 by let's say 250 million, if I'm not mistaken. And now from Q2 2024 to Q3 2024, up by 360 million, or let's say 350 million. So really from quarter to quarter, the deposits and the number, you can see it here, driven by increased deposit customers, so people using more and more the services and trusting it. That's amazing. That's, oh man, that looks really awesome. That looks awesome. Nice one. Okay, those financial numbers, we already checked it, if I'm not mistaking anything. And one more time, just a quick glance on the incentives level. I mean, we covered it as well already through the Excel sheet, but they have partner incentives, so basically drivers and merchants, and then they have consumer incentives, so the end customer, who whatever, ordering food through the app, or ordering a ride through the app. And you can see really they're not granting that much more to the partners, but way more to the consumers, to the end customers. So you can see it here, year-on-year change is way stronger compared to the partner incentives, and I assume so really battle for, not for the staff is going on, for the best employees and merchants, it's more battle for the customers, and I hope it will pay out. I mean, in the end, look, it's a one more time investment into the future, and it seems like Grab can afford it with this cash flow numbers, with first time EPS positive result. With this cash balance, you can see it here, cash and cash equivalents, net cash liquidity of roughly 5.8 billion US dollars, and growing basically. So yeah, all of this looks amazing. You can see as well, when we talk about the major sources of income, these three big pillars. Look, deliveries is adjusted EBITDA, 60% year-on-year growth, mobility 80% year-on-year growth. So both of them are reasons that to achieve a positive adjusted EBITDA basically. And yes, financial service obviously is negative because it's comparatively new business. Guys, please keep in mind, yes, there's the wallet business, the payment business, Grab Pay, and that is already existing longer time, but the digital banking business is really new. Again, I think Q4 2023 launched, so not even a year ago. And yes, they have a tough timeline with 2026 reaching profitability, and so they need to step up their game. But yeah, they're doing it. You see it. Last quarter 75% negative, now 40% negative. So that's working very well. Incentives we covered already. Outlook we covered. Yes, so that's looking great so far. Let me check out if any results at Seeking Alpha or any market feedback is already available right here. Not yet. And you can see as well, I mean, we calculated now our earnings per share by our own. I hope I calculated correctly, but here no numbers listed there. But then, as the last step for today, let's check out the comments. Part of it we covered already. You have been very active in the comment section, actually, guys. That's really nice to see. I love it. I love it very, very much, man. Okay. Aaron Rush is stating that I have 1,000 shares at $3.5. Have little visibility of the growth. Yeah, nice, man. Congrats first to being invested and find a good point of entry. I mean, you are already up and strongly up, actually. I assume you are not invested that long ago. I mean, I'm invested as well, only since Q4 last year, but stayed patient, and last 2 months especially proved that it was worth the time to stay patient and wait. Jack Trion is stating it is still not an extremely well-known stock. This will bring more eyes to the story for sure. And Aaron Rush is here putting the emojis together and smile. And yeah, I'm sharing this as well. I mean, it's just a matter of time that it's getting more and more focus by the investors, even though it's not a strong small cap. Yeah, it's not a micro cap company or small one, yeah. So the capitalization level and enterprise value has a certain level, 2-digit billion US dollar level. But yeah, I mean, in Germany at least, if you are not have been a tourist in Southeast Asia, you never heard about Grab, very likely. If you have been a tourist there, everyone I know knows Grab afterwards. So that shows how strong the reputation is, how strong their marketing is, and how they use the incentives maybe as well. So, and I see as well so much focus just based on the aspect that it's not getting granted that strong focus at the moment by the investors, by the analyst houses, financial houses and agencies and analysts, and yeah, I see there as well so much potential. Then Jacques Trion is stating, I use Talabat a lot, great company. I think the parent company trades in Germany. Whew, I'm not sure who's the parent company. Okay, now they're talking about in what else Jacques Trion is invested, like Toast. I think Toast is as well payment provider and processor in the food business, restaurant business, gastronomy business. Very interesting stock as well. But I've decided for StoneCo, so tomorrow we will cover StoneCo, point of sales, financial service and ERP software provider out of Brazil. And active as well in other Latin American markets, so don't miss this one. It will be a nice one as well, I assume. Even though Grab is for me the larger story and a little bit more interesting, and that's the reason why it's ranked on my. For me, it's my third favorite stock after Hims & Hers and after Nu. And Nu we will cover on Wednesday, but still I'm very convinced, or let's say not very, but I'm convinced. When we talk about StoneCo. Okay, so they talked about different kind of other stocks, but I love that they have been active here and they get some, provide some feedback as well in the stream, in the comment section about the results of Grab. So thank you very much to DSD, logo design specialist, to Aaron Rush, and shout out as well, of course, on Jacques Trihorn, a very reliable, loyal viewer as well. And guys, I already mentioned it. I mean, we come to the end of this stream, but before we come to the end, just a quick outlook about the upcoming streams. So tomorrow evening, I will cover StoneCo again one more time. Point of sales, financial and ERP software provider out of Brazil. On Wednesday, we'll cover Nubank digital banking service, actually the largest digital bank outside of Asia with more than 100 million customers in Brazil, Mexico and Colombia. And then we will finalize, or at least my earnings season, on very likely 5th of December, so beginning next month, with SentinelOne, the US-based endpoint cloud identity security and data and processor out of USA. Already mentioned it. So guys, don't miss to join the stream tomorrow and of course on Wednesday if you are interested. And guys, of course, one more time, if you enjoyed the past minutes and almost 1.5 hours actually, guys, feel free to like and subscribe to this channel on YouTube, and of course you can follow me as well on X and on Instagram. Always the name is A Sense of Capital, like here on YouTube. And Stanley Nastarash is stating 10,000 shares at $3.21 became my 4th biggest position today. Oh yeah, man, congrats man, big respect. I mean, being invested with roughly 32,000 US dollars originally, and now I mean it should have a worth of, what was the price, $4.80 or something like this. So roughly 50,000 US dollars. Yeah, roughly 50,000 US dollars invested. Congrats, man. That's definitely a strong one. I mean, look, I don't even know how much shares I have, honestly. Let's here, how much is it? 3,273. So let's say 3,300. So after this call, I think we're talking as well about roughly 15,000 US dollars, 16,000 US dollars, not my strongest one. I think it's the fourth largest one. Yeah, the fourth largest one after Hampton Hers, after New, and after Central One, but still a strong one. And again, one more time for me, you can see it here as well at this table, positioned on the third rank. And if I could only invest in 3 companies, for instance, that's the meaning of this. I would invest first in Hampton Hers, then in Nubank, and then in Grab, and sell the other stuff away. That's the reason for this ranking, let's say like this, even though I like other companies too. Yeah. So guys, one more time, but that's it for today. I thank you very much, Stanley. I appreciate the nice and kind words. And guys, hope you enjoyed the stream. Again, one more time, feel free to follow and subscribe. And yeah, hopefully to see you tomorrow, or Wednesday at Nubank, or at the beginning of December at Central One, or if not, Q4 results, full year results 2024 in 3 quarters when we talk about Grab. Would highly appreciate if you join again the stream in the future. But most important, and one more time, a quick disclaimer, that was no financial advice, consultation whatsoever, and there's no guarantee for correctness of the provided data. And of course, guys, take care of yourself. Staying healthy is most important, way more important than any money out there in the world. And yes, guys, that's it for today. Thank you so much for joining and having you in, and see you next time. Bye. A sense of capital.